Hi there, Serial Trader here. I'm going to do an update on the major US indices, and there's certainly been some nice action since the last video there, which I believe I did on Wednesday. So let's just jump into the hourly chart here on SPX. So this is what I'm currently leaning on as kind of my, now I'll say right now, there's multiple scenarios that are potentially in play here, and I'll go through some of them, not even all of them. But this is the one that I'm kind of leaning into right now, and that's where we had this initial 5-wave move down into potentially a larger wave 1, and that was into the low at 37.3248. Then we had this nice sharp bounce up, possibly for a wave 2, and that was into the 38.30 level or so. And now we're potentially working this wave 3, the downside, of possibly a larger A or a larger 1. And keep in mind where I have this wave 3, 4, and 5 label placed. These are just placeholders. In all likelihood, if you had a third wave to the downside, you'd be looking at least kind of this zone between the 1.32 and 1.618 fib relationship between 1 and 3. So you'd be looking, I don't know, maybe some pressure down to the low 3600s in this third wave, if that's what we have materializing here. But just to keep things kind of tidy, I have it more like this, right? Okay, so again, this is kind of my lead. Well, the one I'm leaning on more than the others, although I never have too strong of an opinion unless something's just really, really crystal clear, and I don't think we're quite there yet as far as clarity. So again, yeah, just to go over it, this would label this move off the 36.62 low over here as a 5-wave ending diagonal, possibly ending a larger wave 5, potentially of a larger wave 3, or again, on the longer term chart, if you counted a certain way, a larger wave 5. Now, if that was the case, then we're going to have a pretty substantial correction. And so far, we've turned down. But again, until you actually take out this low over here, here's the level that really kind of gains some traction as far as more downside, in my opinion, is if we take out this 36.62 low, that kind of tilts the odds more towards this interpretation of a potentially larger degree, more severe, longer lasting corrective move to the downside, or even trending move to the downside, depending on that larger degree wave interpretation. Now I'll go look at this, and there's still a bullish case here until this level gets taken out, and I'll go through exactly what I mean. So again, as long as this, so since this was the low of our last corrective swing by my interpretation here, that 36.6271, you could also label this as a leading diagonal, 1, 2, 3, 4, 5 for leading diagonal wave 1. This is an A, B, C down for a wave 2, and now we're potentially starting to head up. We're going to be starting to head up in a wave 3, obviously to new highs. And again, these are just placeholders. You'd be looking, at substantially higher levels in wave 3, 4, and 5. And again, to be proportional, they'd be much higher even than what I'm showing here. But just to kind of show you the expected kind of movement of the pattern, not the exact levels or the time at which it will happen. Just kind of placeholders. But let's just drag this all back down here, just so I can get into the scale I want again here. So yeah, this is absolutely viable. And here's the bull case. So you got a 3-wave move down so far. And if you label as an ABC, you have the AC equality relationship that we almost hit, 36.9208. We hit 36.9412 and got some sort of reaction off of there at least. Now, is that low going to hold, or are we just going to keep going down? I personally think, we're going to continue going down in my previous scenario in more of a third wave to the downside. But if this low holds by chance, I mean, this is certainly viable. You can go leading diagonal 5 up, ABC zigzag down, and heading up in wave 3, and we're not done making new highs yet. This scenario is intact as long as we hold this level. So again, the more bearish, or I guess larger downside potential interpretation definitely gains a lot of traction, taking out this level at 36.6271. But if you want to try and go long against that level, I mean, we're pretty close to that, so that's a pretty reasonably tight stop if we do actually turn back up again. Not a bad attempt at a long, at least, although I wouldn't be overly confident. And we'll go over some reasons for that as I progress through this video. But anyway, I just wanted to show you the very much valid bullish interpretation and where it would become invalid, which is important information. So a lot of the Elliott wave methodology, people get wrapped up in trying to predict too often when they should really just be sorting possibilities and then weighting them more so as probabilities as things kind of develop. So right now, this is possible, as is my first more bearish interpretation. As far as which one is more probable, hard to give a real solid edge right now. I mean, as long as we hold this level, this certainly has a degree of probability. But the nice thing is, you know, where this interpretation absolutely falls apart and is invalid, and that's for the real use, I think, of the wave principle overall, is knowing where you're wrong, knowing where, if you're bullish, you should stop being bullish, or vice versa. And I think in that sense, that key level here to hold, if you're trying to remain bullish, is that 36.6271. So keep that in mind. Okay, I think I've gone through this scenario enough. Again, the first scenario still has this as a diagonal, but instead an ending diagonal, and we're starting a larger impulsive move down for possibly a larger wave A or 1. Again, once you start going to higher degree labelings, you're just it's basically like you're speculating on what the larger pattern is going to be, even though you're still just tracking the smaller pattern. So I don't want to go on too high of a time frame here when we're tracking these shorter term patterns. Let's just kind of keep it on the shorter term scale, and then let the market kind of reveal more about the larger patterns as they develop. Right now, just not enough development to have a high confidence view of what a larger pattern is going to look like. But we do have some good information. We definitely have this 5-wave impulsive move down. We have a internal retracement, a partial retracement of that move, and we've made another leg down to new lows. So that's the real solid information we currently have. I think it looks like we're good to continue a little bit more downside here. And again, if we do take out that 36.6271, I think more downside is going to become kind of the favorite interpretation. But right now, it's not a high confidence chart at the moment. It could basically go either way, as I pointed out, between this one and this one, right? Okay, now another, well, this is a 15-minute time chart, so a little shorter time frame than I normally get into on these videos. But Darren, in the comment section on the last video, I think what he was asking is, did we just do an A, like an ABC up for A, ABC down for a new low to a B, and then are we going to come up in a C wave for potentially a larger running or expanded flat? Of course, it would be an expanded flat if we get above this high up here at 38.30.50. But if we do 5 waves up to a level lower than that, it could be considered a running flat, where wave C does not make a new extreme beyond wave A. And again, that could be where we have this 5 down for A or 1, then we have A, B, C, either running or expanded flat for B or 2, and then we come down for C or 3, etc. So on a shorter term basis, this is certainly a possible interpretation. Although I think you're adding a layer of complexity that you don't need to yet. Okay, so I like to stay with the simplest interpretation until you're forced to adopt a more complex interpretation. That's the way I like to operate here with counting the waves. So for me, the simplest and currently, I guess we'll call it slightly favored interpretation by me, is that we just got 5 down for 1, some sort of three-wave move up for wave 2, and you can see, and part of this interpretation is, okay, the most common retracement level for a wave 2 is, the 61.8% retracement level. Now we slightly exceeded that. We basically landed in between the 618 and the 786. So that's a very almost desirable wave 2 retracement, and a sharp, deep wave 2. And then we've come down fairly substantially in a nice impulsive fashion to the downside. So that kind of has me leaning on, just so far, labeling this move down as a simple impulse wave in development. So 1, 2, then we're looking for 3, 4, 5, right? So right now I have no reason not to label it this way. It certainly is currently acting like an impulse wave to the downside. So that's why I'm kind of leaning on this one. But again, as I said, this certainly valid. Ideally, you would want to hold this level, 36.94, for this bullish interpretation to hold, but the actual level of invalidation would be 36.6271. And you can see I did a fib retracement of this entire diagonal here, and we pretty much reacted off that 786 retracement level. You can see we had a little spike down, but largely reacting off the 786. So if this is one deep 2 to the 786 and the AC equality, and we start coming up, you know, substantially here, you just can't discount that the bulls aren't done here yet. They might not be. I kind of think they are. I'm leaning towards that, but I'm definitely aware of this scenario where they're not done, and we still got some more upside here in February. But they really got to prove that before I'll believe it. I honestly, I won't believe it unless we actually make a new high above 38.70.90. That's the only way I'm actually going to fully accept that we still have this impulse wave to the upside in development and substantial new highs. Now, that's a long ways up from here, but just analytically, I won't actually turn to accept this as kind of like my lead interpretation unless we actually break new all-time highs. Okay, I think I've kind of beaten the wave counts to death here. I'd like to go into the Thinkorswim candlestick charts, go through some stuff on there. So here's where the other things, aside from just the wave principle. So a lot of times you'll have multiple valid scenarios with the wave principle. That's pretty common. Occasionally you only have a couple, and then even more occasionally than that, you only have a couple and they both kind of point to the same direction. That's kind of like the real high confidence trade setup that I like to look for. But the rest of the time, you're basically just sorting possibilities and not necessarily getting amazing trade setups. Okay, but the occasional time when everything's kind of lining up super clear, and even multiple scenarios are all kind of pointing to the same thing, as well as other complementary things I look at here. That's the high confidence trades. And right now we're not in that situation yet. Okay, back to this. So daily candlestick chart in SPX. So we had a gap down after a little bearish engulfing candlestick here, and that was on the 26th. So this is actually technically a valid bearish engulfing candlestick because the prior real body, which happened to be kind of this hanging man candle, that prior real body was fully engulfed by this, even though they're both pretty small bodies. So technically a bearish engulfing candlestick, and that did mark the high. Nice gap down, follow through. We had a partial bounce up. You can see we're rejecting the daily T line here. So normally in an uptrend, you bounce or find kind of support around that daily T line. In a downtrend, you start finding resistance around that daily T line. So that's notable, kind of a shift in the way it's reacting around these moving averages, just everything else aside, just looking at those. We've lost a 20-period simple moving average, which was providing quite good support throughout this uptrend. We've lost that now, so that's notable. And we've basically just closed, let's see, where's the 50-day simple moving average? It's 37.15.95. We've closed at 37.14. So we can say we've essentially kind of reacted around and closed at the 50-day simple moving average. Our oscillator is coming off getting towards oversold, but not actually even oversold yet. So that's what can be remarked here on the daily candles. Now on the weekly, I think I mentioned this in the last video. Let's keep an eye on this weekly bearish engulfing, see if it actually forms. Well, it did form. So that's a more significant candlestick on a higher time frame. I think the candlestick signals have I would give them more weight or more significance, and this is certainly a significant one. So this is a weekly bearish engulfing candlestick on SPX, engulfing 1, 2, 3, 4 prior real bodies. So we've engulfed the real bodies of 4 prior weeks in a single week. We've closed below the weekly T line. We're coming off that overbought condition on the weekly, just starting to come off of it. So to me, this is potentially on the larger time frame a more significant bearish signal, and usually the more prior bodies the engulfing candle engulfs, the more significant or powerful the signal is. So this is certainly worth noting, this weekly bearish engulfing candle, engulfing 4 prior weeks. Okay, so I would definitely want to point that out. That really caught my eye. So that makes me lean a little more in to the more bearish Elliott wave interpretation. Give it a little more credence, if you will. Dow Jones Industrial Average, same situation. We're breaking down here. Now the Dow has already broken and closed well below its 50-day simple moving average. So definitely some, at least relative to that moving average setup, it's acting weaker than SPX. And you can see we're respecting this daily T-line as resistance instead of support. So definitely a little downtrend developing here. Getting towards the oversold condition on the oscillator, but not even oversold yet. And remember, you can certainly stay oversold or overbought for an extended period if you have a trending move. So worth mentioning. What do we got going on here? Weekly candle on the Dow. Let's see here. Now, is this a engulfing candlestick on the weekly? Let's see, this week closed at, the prior week closed at 30,996.98, and we opened at 30,989.85. So we didn't open quite high enough for this technically to be a bearish engulfing candlestick, although it's certainly a bearish candle. You can see we had kind of these small bodies with sizable upper shadows kind of rejecting these higher levels the last couple of weeks. And then we've had the breakdown, close below the weekly T-line. Just starting to come off the overbought oscillator on the weekly. So, yeah, Dow looks poised for more downside as well. Definitely breaking. Nothing really substantially different than SPX. NASDAQ Composite. You can see on the NASDAQ Composite, we are... The mighty, the tech index is even cracking. Take a picture. It's amazing. It's actually going down, right? Now you can see over here we had this weekly hanging man candlestick. So whenever you have what would be considered a bullish hammer if you're at the lower end of the range, when you have that candle at the upper end or the top of a range, in this case all-time high, obviously top of the range, overbought, etc., that's considered a hanging man candlestick, potential reversal. The following week, on the composite, you did not make a new high, or sorry, the following day. Sorry, I'm on the daily chart here. I got mixed up. Daily chart. So hanging man candle, and that was on the 25th. And then I believe this was a little bit of a bearish engulfing candlestick. Let's see. This candle opened at 13,681.21. This 13,681.72. So this opened just high enough to be a bearish engulfing. Let's see if it closed low enough. This closed at 13,635.99. This closed at 13,626.07. So yes, this is a small but valid bearish engulfing candlestick, engulfing the real body of this prior hanging man candle. So interesting, kind of a little bearish two candle combination. Then obviously some follow through, nice gap down. Didn't go up to fill the gap, just continued to show weakness. And now we're below the daily T line. We're below the 20 period simple moving average. And the 50 simple moving average is, fair ways below us, and that could be a potential target here on the NASDAQ Composite. Oscillators coming off the overbought condition, nowhere near oversold. And on the weekly candle for the NASDAQ Composite, we got a weekly bearish engulfing candlestick on the NASDAQ, so that's certainly worth noting as well, although it engulfs only one prior candle, the real body of the prior week. But nonetheless, a legitimate weekly bearish candle, bearish engulfing. Okay, so that's why I wanted to go through this, point all those out. On the VIX, to me, it looks like it's just kind of consolidating in a volatile but still high range. The VIX certainly isn't absolutely tanking, which would be more bullish, I would think, for the market. The VIX is staying elevated, certainly chopping around, but at a much higher range, higher level than we were at. So VIX definitely not negating the bearish interpretations at the moment. And what do we have? I mean, I don't usually look at weekly VIX candles, but just out of curiosity, let's have a look. Okay, yeah, that's definitely a noticeably large weekly green candle on the VIX. Not much else to say other than that. And I want to look at the VIX VVIX tool. So let's do that. And this is on a legitimate sell signal right now. So for a while we had these big divergences building up where VVIX and VIX were basically making higher lows. And I guess at least on certain degrees, higher highs. But more importantly, making higher lows, not trending down, actually starting to trend up, both of them. All the while SPX was still making higher highs and higher lows. So normally when you have that inverse relationship, SPX keeps going up, VIX and VVIX keep going down sideways to down, right? In this case, they were going sideways to up, even though this was going up. So that was the big divergence that developed. We got the break here where VVIX got above the red moving average convincingly. SPX got below the blue moving average convincingly. Then look at this. I think this is kind of cool. So we had a nice follow through from the sell signal. Now we had this big bounce up, but where did the bounce falter at? Right at the blue moving average. So Fibonacci retracements and wave relationships and everything else aside, just this mechanical study, if you will, that has this blue moving average, which is the now I did a video about this before, but it's the 65 period simple moving average on the 30-minute chart. So basically, in an uptrend, kind of acts as support. In a downtrend, kind of acts as resistance. Now it's just a nice little example of that occurring where we bounced up substantially, but look, acted as nice resistance there, which also happened to be a nice kind of Fibonacci retracement area. But aside from that, just this simple moving average kind of did its job in this case, right? So just thought I'd point that out. Interesting. And according to this tool, I mean, so was this the bottom here we made on Friday? I sure don't think so. And just never mind everything else, but looking at this tool, okay, so VIX made a new high on Friday, VVIX made a new high on Friday simultaneously, SPX made a new low on Friday, so there's no divergence. So to actually get a tradable bottom, what you'd probably want to see, and you usually do, is you'd see VIX and VVIX kind of diverge. Maybe VIX makes a new high, but VVIX fails to, or vice versa, so a little bit of a divergence there between the two. And then that kind of sets SPX up for a reversal and potentially a tradable low. But right now, everything is just kind of working without any divergence. New highs in VVIX, new highs in VIX, new lows in SPX, all simultaneously. So to me, I doubt that we have the low in place here. That's really what the message is. Okay. Yeah, that's really what I wanted to go through on the major indices. I'm going to do some more videos. I got a request for XLE. I'm also going to do a Bitcoin update because I think the pattern development there certainly requires an update from the last video. And all right, everyone have a great weekend. Watch the other videos if you're interested. Comments or questions or insults, whatever, just put them in the comment section. All right, Serial Trader signing off.